Hello and welcome to TechFunnel.com's interview series. My name is Danny White, and today we have the opportunity to talk to Brett King. Brett is a world-renowned futurist and speaker, an international best-selling author, and a media personality who covers the future of business. He has spoken in over 50 countries at TED conferences and given opening keynotes for Wired, The Economist, and CES, among others. He's also appeared as a commentator on CNBC, BBC, ABC, Fox, and Bloomberg, and advised the Obama administration on FinTech policy and the future of banking, as well as regulators and bank CEOs around the world on technology transformation. King hosts the world's first and number one ranked radio show on FinTech called Breaking Banks. He is the CEO and founder of Movin, a successful mobile startup which has raised over $24 million to date with the world's first mobile downloadable bank account. Welcome, Brett. Thanks for joining us today.
It's my pleasure to be here. Thanks for having me.
Awesome. So when did you first get interested in the constantly changing environment of finance and its crossover with technology?
Well, I was always a technologist. I started as a programmer many years ago. But one of the acute problems that I found in finance was that the business people and the technology people just couldn't relate to each other. And so early in my career as a programmer, I found that I had that unique ability or skill to be able to communicate between the two groups. And, I sort of carved out a role for myself in that space. I spent some time in other industries, in telecommunications, manufacturing, and others, but sort of keep coming back to financial services. Because even though they think of themselves as a very traditional business, banking and financial services have been dependent on technology since at least since the 1950s, and you could even call money itself a technology sort of rudimentary form. So, it's a very interesting relationship with it, but particularly now, the rate of change in financial services as a result of technology is just accelerating.
Awesome. So you have an incredible series on banking, starting out with Breaking Banks and wrapping up with the release last year of Bank 4.0. Can you tell us a little bit of how that series came to be and how it progressed up until last year?
Yeah, actually, my first book, which I wrote in 2009, was called Bank 2.0. So that was the first in the series, Bank 2.0, Bank 3.0, Bank 4.0 as sort of the series, the main books. And then I did Branch Today, Gone Tomorrow in 2012, and I did Breaking Banks in 2014, I'm going to say. Maybe 2013, I can't remember. No, it must have been 2014, because it was about a year after the radio show Breaking Banks started. And then, I've also done books that aren't banking focused, like Augmented Life in the Smart Lane, which was a full futurist book. And that ended up on the desk of President Xi last year. So, and was part of his national address that he did to the Chinese people. But the banking series started in 2009, and really that was, Bank 2.0 was my effort to express my frustration as a technologist for hitting this wall of apathy within the banks as a result of technology like the internet. And the rate of change and the frustration that technologies faced. It turns out I wasn't the only one, because the book became a bestseller in 18 countries. I think that's because a lot of frustrated technologists found their voice with what I'd written.
Wow.
And they'd go into the CEO of the bank and say, don't believe what I have to say about this. Read what this guy says. That became a mechanism for the book to sort of go viral, as viral as you get in banking, I guess. But and so that sort of became the foundation for the work I've been doing the last 10 years or so.
Awesome. So the concepts of efficiency, trust, and transparency within banking are often talked about these days, especially with blockchain technology on the rise. How have you seen these concepts evolve when it comes to customer demands and loyalty?
So obviously, part of the problem we face issues around support in banking and frustrations that customers have is because things don't work very efficiently. When you apply for a bank account, you apply for a mortgage, for example, banks make you jump through so many hoops in terms of identity and documentation and all of these things. And you'll often get to a point where you go into a bank and you'll have submitted all this paperwork, and then they'll say, "Oh no, you need this form or you need that piece of documentation that you don't have, and we can't proceed without it." So there's a lot of frustration in banking around what the banking industry calls compliance, and where the average customer doesn't understand why they just can't get something done, they just can't do something.
Absolutely.
So there's a design flaw in banking. Banking is not designed for customers. Banking is designed primarily for the purpose of executing banking stuff, the utility of banking, and customers are almost incidental to that. And so when you had 9/11 in the US and the terrorist financing laws, the anti-money laundering laws that came about with the Financial Action Task Force in the 80s and 90s, essentially all the banks did was take this friction that was being added as a result of legal frameworks around the world and pass that friction on directly to customers, making it much more difficult to do banking. Instead of saying, let's abstract that friction from customers, let's use technology to still be compliant, but make it easier for customers. Customer experience has not really been a goal of banks the last 30 or 40 years. And so that's what's really changing right now is that, and it's not just blockchain, it's more things like artificial intelligence and the emergence of FinTechs around the world, the challenger banks and so forth, that have upped the ante, that have changed the standard of customer experience that regular consumers and the like are comfortable with now. And that's the new benchmark, and banks are having to adapt to that new world. But it's also a fact that we have all of these other service industries going through radical change, like right now. The Airbnb with hotels, Uber and Didi Chung and others with taxis.
Right.
It's really the fact that in every part of our life we have these massive efficiencies coming and redesigning of these experiences and customer journeys as a result of technology. And banks have been somewhat resistant to that change in the past. It's ridiculous that to open a bank account in 80% of banks in America, you still have to go into a bank branch and sign a physical piece of paper. It's just
absolutely
ridiculous.
Yeah. How important of a role does consumer behavior play in the overall disruption of finance and technology?
I think that's a key driver. The use of a mobile phone, the use of internet in general, and acceptance of those technologies by consumers is a core driver. If customers weren't using this tech, then there wouldn't be a need to change. But I think it's also about the role banks have in our life. What's fundamentally changing, I've written about this in the new book, Bank 4.0, is that in the past, the bank was this entity and you had to conform to their rules to get access to banking. If you wanted a credit card or a mortgage, you'd have to jump through their hoops and pass their rules to get access to this part of banking. But increasingly, the utility of the bank is surfacing through this technology layer. Right now, it's smartphones, but in the future, it's going to be voice first, voice-based AI, and then it's going to be smart glasses in a few years. And as banking becomes embedded in this technology layer, the one thing that happens is we're sort of reframing the utility of the bank much more efficiently through this technology interface. And so that's the overarching trend that technology is taking us. And obviously banks are not immune to that. But at the heart of it, it's just about getting access to banking faster, easier, simpler, embedded in your daily life.
Mm-hmm. Awesome. So speaking about smartphones, there are already elements of banking by smartphone in play. Do you think eventually we'll be paying, saving, investing entirely with our smartphones and plastic credit cards and debit cards will be eliminated? Or will we still
Well,
have those around for a few years?
Well, I think there are already customers who do that. Move-in, when we established Move-in in the US, we originally called it Move-in Bank, Move-in Bank. So it was sort of the epitome of mobile digital banking. We were the first bank service in the US to launch account opening just by signing up in an app. We were the first banking service to offer contactless payments technology back in 2012, even before Apple Pay and Google Pay were around. So, we experimented with this stuff fairly early on, but of course that's getting on eight years ago now. So this tech is becoming more and more commonplace. But if you think about, let's take a credit card as a use case. Why you have a credit card. There's two main reasons why you have a credit card today. The first is maybe to buy things when you're out shopping that you can't afford to buy today, but you want to put it on credit because you'd like to purchase it today and you can pay it off over a period of time. So maybe buying a new laptop, a new iPhone, a new dress, or something like that, right? But the other scenario is what we call sort of emergency cash facilitation. So you go into a grocery store, you pull up to the, you fill your card up, you pull up to the cashier, and you swipe your debit card or you tap your debit card on your phone, and the cashier gives you this look and says, "I'm sorry, ma'am, your card has been declined."
Right.
And then you're like, "Oh no, my salary hasn't hit the account yet." And so then you've got to pull out the credit card to solve that problem because you've got a use case where you need additional cash. So they're typically the two types of use cases. But if you think about how that would be designed in a digital world, well, as you walk in the grocery store, I know how much you've got in your bank account. I know your bank balance. I know how much you spend on groceries. And I know there's a disparity there. I know the amount of money you've got in your bank balance is not enough to pay for your groceries today. So as you walk in the grocery store, I can send you a message on your phone going, "Hey, Megan, it looks like you don't have enough cash to do your grocery shopping today. Would you still like to proceed? If you want an extra $250 to complete your groceries, tap yes." And so in a technology-based world, I wouldn't have to give you a plastic card. I wouldn't need you to sign an application form. I wouldn't need your signature. I wouldn't need a credit card product to solve the use case of providing you access to credit to buy your groceries.
Right.
There's a much better way to facilitate that technologically. So in answer to your question, yes, your credit cards are definitely going to disappear.
Awesome. What type of role will social media play in digital banking? We often think about social media in terms of marketing and getting enough followers and getting customer engagement. Will it play a role in digital banking? Will we be allowed to log in with LinkedIn through our smartphones to our Bank of America account or Wells Fargo account, things like that?
Well, this is one area where the US sort of lags some other jurisdictions. So if you look at China as an example, China did $22.5 trillion in mobile payments last year. The US did about 300 billion. So that sort of shows you the scale of the difference.
Big difference.
There. US is not even in the same ballpark. But one of the reasons mobile payments have been so effective in China is that the first use cases that emerged were on top of social media and were for person-to-person mobile payments. And so things like Chinese New Year, the red packets they have at Chinese New Year, these were really a great scenario use case that were adaptable to both social media and mobile payments technology. And then once people started sending each other red packets, sort of the equivalent of the gifts you give at Christmas here in the West, once people got used to that, they were like, "Well, why can't I buy my Luckin coffee? This is the Starbucks competitor in China. I'll buy my noodles or whatever. I'm using my phone." And so network effect was very important for the growth of mobile payments. So I think you could see players like Facebook, Instagram getting into that space where person-to-person mobile payments is sort of a natural artifact of social media, because money tends to be social, particularly sharing the cost of a meal when you're out on a Friday, Saturday night, things like that. There are elements of social that are naturally built into that. But the other aspect is probably identity management. I don't think banks will stay in the business of identity, or banks call it KYC, know your customers, and identity verification systems. I think ultimately, identity is a data set, and that ultimately social media networks could be quite powerful. Although we've got the trust element to resolve from the social media perspective. But certainly network effect within social media is a very important element to the growth of financial services on technology platforms.
Absolutely. So looking to the future, what does the bank of the future look like, say 20, 30 years from now? And what kind of changes should FinTech organizations specifically be aware of?
So I guess that the main thing is that if you were designing a bank from scratch today, would it look like the bank you built in the past? And the answer is no, emphatically.
Right.
The organization chart is different. The core technology is different. The way you interface with customers is different. The banks who are most successful in the next 10, 20 years are those that are embedded in your life from a banking utility perspective, behaviorally, and able to help solve your day-to-day money problems, whatever they may be. So that's really about the technology interface. And so if you were building a bank from scratch today, it would look like a technology company. It wouldn't look like the organization structure that you see within a JP Morgan Chase or Wells Fargo or a HSBC. And so that's why I say in Bank 4.0, when I wrote that, I identified that the biggest bank in the world in 2030 will probably be Ant Financial. It's the largest privately owned company in the world today, about 150 billion in valuation. It's a spin-off from Alibaba in the early days. It's a financial services company Jack Ma runs out of China.
Right.
They're in 80 countries already. Alipay is one of the fastest growing payment companies in the world. And so, if you're building a bank today, you should build it more like Ant Financial in terms of the org chart and the way it's structured, and sort of the reliance on technology. So, one of the things I look for in determining whether a bank has a chance of succeeding over the next 10 to 20 years is just the makeup of the board and the executive team, how many technologists they have at the top of the business. And, that's a dead giveaway. If you've got one technologist on the board, zero, then you're just probably not going to make it, or you're going to have a very, very difficult time adapting.
Right.
Because the core interface of banking is shifting from the bank to banking technology.
Absolutely. Any predictions on FinTech for 2020?
2020. It's not that far away.
I know, 6 months. 6 months from now.
Yeah. Look, I think next year, you're going to see a lot more voice applications in banking. So voice first is definitely going to be a thing. I think that's sort of probably the major technology you're going to hear about, and more in introduction of artificial intelligence and use of AI in banking. So that will be done around behavioral elements and things like that. But I think financial health is going to be another theme in the US over the next few years for banking. So basically, try to think about an AI built into your bank account that helps you save money and helps you be financially healthy. I think that sort of application is going to start to see more of a thing, because there's a business opportunity there. 70% of Americans can't afford a $400 financial shock or emergency these days. So technology, I think, will help us address some of those issues behaviorally So I'd say they're the two big trends that we're going to see next year. Increasing use of AI in the customer layer and increasing use of voice.
Absolutely. Speaking of artificial intelligence, you're working on a new book project that's actually going to come out in 2020 that talks about the impact that AI combined with technology will have on society, including on our government and world economies. Can you give us just a sneak peek of what that is?
It's top secret. I don't know how you guys found out about that. All right. Well, so the working title is The Rise of Techno Socialism. And it's sort of, it is time to come out sort of in the US election cycle next year. But essentially, what we've been looking at is as AI produces this incredible wealth through these new emerging technologies, it's also going to produce some displacement. We're going to displace some traditional jobs. One job as an example, which is 98% certainty of being made redundant, is like a loan officer at a bank with artificial intelligence, as an example. So you're going to have a lot of technology-based unemployment, in markets like the United States, where we automate a whole range of jobs: accountants, lawyers, doctors, bankers. There's elements of those industries where automation will definitely impact. So as that occurs, and as we see transcontinental truck drivers lose their jobs to autonomous vehicles and things like that over the next 20 to 30 years, we're talking about some deep structural changes in the economy. As that happens, massive wealth capture, the possibilities of increased inequality between the rich and the poor, the owners of the technology and the investors in these technology companies, and the 99%. The wealth gap grows intensively, and with them not being able to get the jobs that they previously got, the long-term impact and the uncertainty increases. And so this is going to force these massive pools of wealth created by artificial intelligence. It's going to force us to look for ways to better distribute that across the populace more evenly. And so that sort of comes back to this view of how we'll deal with that from a political and economic perspective. Because if you look historically at the levels of inequality that countries like the US and the United Kingdom have today, that sort of were at the heart of the populist movement, Brexit and Trump, those levels of inequality, when we've seen those in the past, have resulted in revolutions. The French Revolution, the Bolshevik Revolution in Russia, and so forth. And so rather than, AI is going to accentuate those problems. So rather than us have a revolution, it's probably better to have a sort of orderly approach to this through policy and through redesigning the way our economies work. And so that's sort of really the big picture stuff that I'm looking at in this book. It's really interesting, a lot of economic theory stuff in there, but comes back to what's at the heart of people's motivation when they choose a different form of government and so forth.
Well, that was the final question. We can't wait for the book to be released next year. Sounds like a very interesting read with a lot of important concepts that will be critical for the next couple of years. Brett, if you can share with us where people can find out more about you and your work.
Sure. Well, you can go to brettking.com. That's BRETT King.com, which is my website. You can follow me on Twitter at Brett King, Brett King Author on Facebook, and Brett_K at Instagram. And that's sort of a way to keep in touch with me. Connect with me on LinkedIn or Facebook, on Twitter, and I'd be happy to answer any questions people out there might have.
Awesome. Thank you so much for stopping by to share your insights with us. We really do appreciate it. Guys, thanks for listening to this interview. For these and other interviews and topics, please visit us at techfunnel.com. You can connect with us across social media and subscribe to our weekly newsletter so you can stay up to date on everything that's happening in the FinTech industry. Thank you. Thank you again, Brett.
Thanks.